let's just jump straight into it of accruals versus cash accounting. Can you identify the important different thresholds which are relevant to charity accounting and at what point? So I'll go through them all. This is the graphic that shows really where all the key thresholds are. So from £10,000, we've got income point where a charity commission annual return is required. £25,000 where an independent examination is required. £100,000 is the point where if you are a denominational church, likely to be a Methodist Church or a Church of England, but some others as well, where you've not had to register in the past with the Charity Commission. If you hit the £100,000 limit, you have to register with the Charity Commission as a registered charity. The one that most people got right was the 250k income point for accruals accounting. We've got 500k, which is the point at which you're classed as a large charity. And then the £1 million mark is the income threshold for statutory accounts. And then we have the 3.26 million for asset threshold, which seems a lot. But if you have a building when you're living in and around London, or you're a charity that has buildings in London, that threshold is met very quickly. Now, why am I mentioning this? And this is really important, and we have found this particularly in the last year to 2 years. The thresholds for all of these areas have not changed for many years, but the finances that you and your charities are dealing with have changed. So, for example, between January 2005 and January 2025, the combined inflation in the UK has been around about 60%. So it means that if your charity has not really changed or done was static and it had the same number of donors or funding streams, you are essentially 60% bigger, like potentially than you were 20 years ago. And it means that it's more likely in this season we are in that you may well jump through a threshold. Now, you might be sitting there this morning thinking, I'm quite safe, and we're in our cash accounting threshold. We don't think we're going to go near the £250,000 of receipts coming in. However, it might well be that a decision comes along, or a very generous legacy comes along, or a decision around selling a building or some investments to help stability of the charity, and you can quite easily go through or exceed that threshold. And we've seen that in the last 3 months. We've had a charity that's exceeded the statutory audit threshold without knowing, but a charity that didn't realise they should have registered with the Charity Commission, and with an organisation that didn't realise that they crept over the accounting threshold for being having to do accounts under accruals accounting following the charity's SORP. So the key message is be aware of these thresholds. If you think you might be crossing them, it might well be worth doing some upfront planning as to what that means for you and your charity. What I want to also mention is that you do have a choice. So if you at the moment are preparing your accounts on a receipts basis, when money comes in the bank and money goes out of the bank, and it's a more simple way of accounting at the year end, you still have a choice as to whether you account following cash accounting or accruals-based accounting. There is an assumption sometimes that if you are under the threshold, you should just be doing receipts and payments accounting. However, there are times when for certain charities, it's actually beneficial to account for things on an accruals basis. I'm going to explain a little bit more in a moment as to what those key differences are. But you do have a choice, particularly if you're a charity that has a lot of assets or significant investments, or we have some charities that have significant income through donations, which aren't necessarily money. So we've got a charity that is donated holiday lets for users and individuals and families who may be terminally ill, and they recognise the income of those donated holiday lets. So it might well be that accruals-based accounting might well be better for you and your organisation, even if you are below the £250,000 threshold. I've got a table here which gives a really quick, helpful overview summary as to what the differences are between cash accounting and following accruals accounting using the charity's SORP, which is the guidance and the rules and the outline of how the accounts are to follow. So there's a principle here that essentially cash accounting is all about when money comes in to your bank account and goes out of your bank account, and the income and expenditure dates are to do with those receipts and payments and the date on your bank account. Whereas the charity SORP is accounted for things very differently. Lizzy's going to go into a bit more detail about income recognition very shortly, about how income is recognised under accruals accounting, and that is quite considerably different to how a business would account for income. So we've done quite a detailed session on that, which Lizzy will be covering in due course. And obviously we have assets in accruals accounting, which have a formal balance sheet showing your full snapshot of your charity's financial position, whereas cash accounting has a very simple list of any assets or liabilities you may have.